Hi folks, today is update day for June. We're going to be taking a look at my Vanguard accounts and my Trading 212 accounts and all the different guises they are in. I'm going to talk a little bit about how the last month has treated me. I'm going to take a run through my portfolio holdings to see the kinds of things that I've been buying, the kinds of things I've been holding, the kinds of things I've been getting the benefit of. And of course, at any stage, if you have any questions, any comments, make sure you leave them below. Let's just get straight into it. So hello again folks, my name is David from prettypenny.club. I make videos to help you reach your financial goals with content on investing, passive income, frugal living, generally trying to make your money work harder for you. If that sounds interesting to you, then please consider subscribing. So here we are in Vanguard. You can see there that the value of this particular account is worth about £16,613. That's down around £68 from this time last month, or 0.41%. May wasn't a great month for most of the stock markets. Most people took a bit of a tanking at the start of May. It's kind of leveled off, picked up even a wee bit. So to say at this point only 0.41% behind is probably a pretty good result. I think it shows how having plenty of index funds in your portfolio can help keep your account nice and stable, even through the ups and the downs. You can kind of bank on a certain amount of consistency, not always, as we've discovered in the past year or so, but in the main, they're a lot less volatile than picking individual stocks. Anyway, 24.25% in front since I started this account in about December of 2019. I have moved my ISA for the tax year of 21-22 over to Trading 212, so there isn't really anything happening in this account. It's just nice to see how things are moving overall with the money that's still in that account. You can see my holdings here. I think from memory they started out as 40, 35, 10, 5 and 10, and you can see how the different ETFs have moved. The current weight has kind of shifted away from what we've got going on there. Trading 212 offers a very nice rebalancing facility. I'll maybe talk about that in just a little bit, but these are just going to be left to their own devices at this point in time. I don't really have any intention of moving these weights around, particularly when I'm not really using this account for my ISA in this particular financial year. But anyway, it has served me pretty well over the last 18 months or so, and I'm obviously pretty pleased with the amount of money that has come back. So the actual returns are £2,388 in front. That's all tax-free. That's all pretty good. That's just making consistent, regular investments over the months, and it's good to see such a healthy return at this point in time. Any questions about any of that? Just let me know in the comments below. Okay, so here we are in the Trading 212 desktop app. I do so many of these videos with it on my phone. I just thought this might be a nice little change. You can see what else Trading 212 have to offer away from their phone app. So this is their full-blown desktop application. You can see it's all very well laid out, pretty clear. I go with the dark theme so it doesn't feel like I'm looking at a light bulb all day. But people have their own preferences. This is mine. So this is my ISA for 21-22. Always have to think about that. It's basically based around two particular pies. One is this Vanguard ETFs and the other is what I call a future industry pie. So the Vanguard ETFs is probably going to be the one if you're familiar with my Vanguard ISA. The holdings in it are the S&P 500, the FTSE Developed World, the FTSE 100, the All World High Dividend Yield and the emerging markets. And you can see that I have a target of 35, 35, 10, 10 and 10. And you can see just over the months that it has fluctuated ever so slightly away from those targets. That's not a big deal. They're all in the green, as you can see. This, as I say, is where I do all my main investing. Every month, I'm trying to make consistent deposits to this. And what I do is basically throw some money at this particular pie, and Trading 212 will automatically split that amount of money into the different allocations that I have asked for. So, for example, I have £1,000 to put in this month. Then it would be 350 to the ETF, £350 to the developed world, 10% to the FTSE 100, 10% to the all world high dividend yield, and 10% to the emerging markets. So no matter how much money you put to that, Trading 212 can very conveniently split that up for you. Of course, you don't have to. If you are depositing money into one of your holdings that's in a pie, you can specify that all of it or some of it goes to a particular holding or several holdings. You don't have to split it up like this, but this just makes it very convenient for me because I'm into this consistent sort of thing of just throwing a certain amount of money at it every month, or as much as it can muster together in a given month, and just let it work for me as the months go by. Moving over to the auto invest tab here, I actually have auto investing switched off. That's really just because I like to stay in control of my investing. I think it's kind of fun as well. A lot of people like to automate this, and that's great because it can really take the brain strain out of it altogether. But I kind of like moving my money over and seeing it being put to work. it feels good, so I leave the auto investing off. Just scrolling on down there, then you can see that after 8 years and £38,000 invested, if that was the plan, then you can see that I would expect, based off a 10% annual return, to have 59,000 in this account. That would be nice if it works out like that. It's just a projection. It doesn't really mean anything, but it gives you some kind of idea as to the value of regular investing and what this compounding can do for you. So that's the bulk of my investing. The other pie that I have is future industry, and it is made up of iShares Global Clean Energy, the iShares Electric Vehicles and Driving Technology ETF, and the Van Eck Vectors Video Gaming and Esports ETF. So these are all industries that I think have really good potential going forwards, and as I say, it's not my main investment, but from time to time I do like to top these up with little bits of odds and ends of money that I might have found lying about. So one pretty cool thing about this was that I received 34p of dividends in my iShares Global Clean Energy Fund, and I was able to automatically invest it back into the pie. So obviously 34p isn't going to make a huge amount of difference, but as the money starts to increase, as dividends increase, then you can automatically reinvest this money back into your pie, and it's very, very convenient. So that's all very cool. You can see that the iShares Global Clean Energy hasn't been doing so good, down a few percent. Electric vehicles is okay, and the Van Eck Video Gaming and Esports ETF is slightly behind as well. I'm not overly concerned about these. If anything, these ones represent, good value now, I suppose, if you consider that buying the dip is cool. Any money that I have available to invest gets put in. I'm not waiting for particular dips, but if you had a range of shares or stocks or holdings that you like to add to over a period of time, then certainly, if you're not adding to them all, when there is a dip, would probably be a good time to do it. So that's my ISA. Not an awful lot to report on that one. Prior to my ISA, I did have this invest account, which you can see has about £7,000 or so in it, 7,200. So we can skip over to that and have a look at how those holdings are going. So just before we get into the holdings I have here and report on a few different dividends and things I got, if you're looking at Trading 212 in the desktop application, you have this option of an advanced chart. So look at this Amazon stock, for example. You can see it's just a fairly price-oriented downward trend for the last sort of week or so. But the point I want to make here is in the desktop app, there's so many more richer opportunities to look at this information than there are on the phone. So if we just click advanced chart here, we can look at things like candlesticks for 1 week, candlesticks. If you're into all that sort of stuff, you can look at these Bollinger Band. If you want, you could look at a simple moving average. There's all these different charts. So if you're trading or if you're thinking about that in any kind of way whatsoever, then this sort of information might be pretty useful to you. I'm a buy and hold kind of guy unless something fundamentally changes or there's definitely a change in the wind direction for some reason or other. So this sort of stuff isn't overly useful to me, but it's information and you can never have enough of it. So if we just go back to the main account here, the first thing I want to tell you about is a little bit of dividends. So just a little bit, £2.20 from the iShares Global Clean Energy and £25, which is a reasonable chunk of dough from Legal & General. Legal & General have been on a wee bit of a flyer as of late, and it's pretty good that they're still paying a fairly healthy dividend and the share price has been rising. So you can see they're 34% up since I invested in these guys, and 203 shares returned about £25. So overall, £7,216, invested £6,848 with a return of 5.36%. I've said before on many occasions that this doesn't necessarily represent my return on investment for Trading 212. It doesn't take into account shares that you've sold or bought. It's a live position for the holdings you have right now. So I will talk about at the end, as I always do, my little spreadsheet that I keep a track of that will show you my ROI for the history of Trading 212 account. So probably the best thing to do then is just scoop down the holdings that I have and see what way we're fixed. So Amazon, 0.4 shares, 6% up, isn't too bad at all. They've just bought MGM. I could definitely see how that acquisition of MGM is going to affect Prime Video and things like that. It's another example of Amazon not paying out any dividends, but constantly plowing profits back into the business. Huge company, as everybody knows, with fingers in all kinds of pies, so I'm happy to hold this position. Avast is a little disappointing at 11% behind. These are the cybersecurity guys, but plenty of good offerings from this company. I'm happy to hold this and would consider adding some more shares at this price. Coke has been going pretty well. As you can see, still paying a dividend, and the share price is going up over 8% now, which is good news for me. GlaxoSmithKline, kind of like the opposite. They're going through a little bit of a transition at the minute. It's going to be a very interesting few months to see how their split of their company shakes out. iShares electric vehicles we have already seen in my ISA. I also held it in this particular account. The reason why I'm not moving all these over to my ISA is that if I were to sell these shares and move them to my ISA, that would use up some of my ISA allowance. So if we get to the end of the year and I have allowance to spare, then definitely I'll be selling up here and filling my tax-free allowance in the ISA. But for now, they are 73 shares in my invest account, and it's going pretty well. Legal & General we talked about. Microsoft are an absolute behemoth in the software computing industry. Again, I'm delighted to hold these. I'm sorry I couldn't buy more shares when it did, but that was the way it was. So at the moment, this kind of price is just a touch high for me to be interested in buying more, but certainly Microsoft, wonderful company. National Grid, the most boring stock available to man, but they also pay a decent dividend and their price is rising at the moment, so that's good news. Palantir is a little bit of a controversial one. People will say this is a hype stock. People will say it's rubbish. People will say it's going to £1,000 a share. I don't know about any of that. I think they've got a big future, personally. At these kinds of prices, I still think they're a buy for me. I would seek to add to this position. 10% behind doesn't look too rosy, but I'm not worried about that at all. I would say that Palantir is very much a long-term hold for me. This is certainly not something I was looking to flip. This is a 10-year job, this one. So I really think the growth potential is there for this company, and I think it could be something pretty big. My own personal view, I'm not a financial advisor, I'm just a dude on the internet. Persimmon, I have hummed and had about getting rid of these guys, and I have held on this long. I'm really hoping that this infrastructure boom that we are being promised by the government is going to take off. I think these guys will get a slice of it. That being said, this company does not particularly excite me, so it may be that I cash these guys in and just buy more ETFs for my ISA. Renewable Infrastructures Group, a little bit behind. They are a half-decent dividend payer as well, and I like what they're doing in terms of renewable energy. So 276 shares of these guys. I'm happy to hold this. Unilever is one of those companies where you have products that they make in your cupboards at home. Without a doubt, they are everywhere. They have all kinds of brands, and they are looking pretty strong at the moment. Another dividend payer here in the UK, 12 shares. Again, it's another one I would consider cashing in for some more ETFs in my ISA, but we stick with it for now. The VanEck Vector Semiconductor ETF is a relatively new one, and I think that that's probably a pretty big business going forwards. So I'm happy to hold this. And the VanEck Vectors Video Gaming I had in my ISA as well. Originally opened my position here in my invest account, and again, I think it's big business. It's no secret, I think this industry has a big future. Esports projected to grow pretty massively over the next few years. So definitely one I'm happy to be involved with. Yep, so there we are. Any questions about any of that? Anything you want to talk about? Again, comments below, folks. Let me know what you think. So let's just talk about the return on investment here very quickly. You can see there for just over £8,000 deposits, that's become about £10,300 overall. So when you're rolling up dividends and free shares and all that sort of good stuff, you can see there that the actual profit is nearly £2,300. And just over 28% return on investment in that. So that's pretty good. So alongside my investing, I do promote Trading 212. I think it's a pretty good platform. At the moment, of course, they aren't accepting new signups. I have been asking them what the story is with that, when they're going to open up their platform again to new people. I don't have anything concrete to offer you on that. They just keep telling me that they're working on stuff. I'll keep pushing them because there have been plenty of questions and people getting in touch with me asking me what the story is there. For now, if you do want to get yourself on the waiting list, I have been assured that is active. You will get your free share if you use my link below when the time comes around that you can eventually sign up to this platform. Anyway, if you have found this content at all helpful, please consider subscribing, hit that notification bell, give me a big like, it will help the channel immensely. Thank you very much for watching. I will see you in the next one.